Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to quickly update you on recent changes in my stocks portfolio, and we'll then discuss why I'm going to buy more shares of Brookfield Corporation in the next couple of weeks and even month. In this context, I will discuss the recent move of one of my favorite legendary investors, Chuck Akre, who added to his Brookfield Corporation position in the last quarter. Other than that, I sold out one of my positions completely during the last month and bought more shares of ATZ after the recent earnings report. I also deployed all the US dollar cash that I had in my RRSP account after trimming Meta during the last month. The dollar figure of my own portfolio at the moment is close to $80,000, almost $78,000 in Wealthsimple and $2,000 in National Bank brokerage, and our combined grand portfolio of me and my wife worth a little bit over $102,000 today. We officially entered the realm of six figures stocks portfolio during the last month. We have a lot to cover in this video, so let's jump right into this. I first just want to start with the new changes in my own portfolio. I had a few moves in my TFSA where I hold all of my Canadian stocks. After ATZ earnings report, when the stock was down almost 25%, I decided to exit my Canadian Tire position entirely, sold my 15 shares of Canadian Tire for $175 per share, and put all that money into ATZ stock. The reason I did this was that I was up almost 20% on Canadian Tire at that point in time, and according to my own valuations, Canadian Tire was fairly valued at around $175, while ATZ was significantly undervalued at $34 per share. I bought 70 more shares of ATZ, and now I personally own 270 shares of ATZ in my TFSA, and my wife also holds 168 shares of this company, so together we own 438 shares of ATZ. I also bought 5 more shares of Granite and 7 more shares of Killam REIT during this month with my own deposits. There is one stock in my TFSA that I really want to buy more shares of it, but if I do so, I would significantly overweight our portfolio in this stock. If you look at our combined portfolio, Brookfield Corporation is actually the worst performing stock in our combined portfolio at the moment. It's down 15% or around $2,000 for me so far. I'm debating with myself to whether or not double down on Brookfield. I think the valuation wise, Brookfield Corporation is really attractive here, and I don't see much downside risk at these levels for this company. In terms of the fair value, I have Brookfield Corporation fair value at around $57 per share, and they have great management team, an amazing track record of value creation for shareholders in the past. So I have a lot of conviction in this stock. In the subject of Brookfield, some of my favorite super investors recently bought more shares of Brookfield Corporation, which increased my confidence in the future of this company. One of my favorite investors of all time is Chuck Akre. Chuck Akre is a legendary investor with a great track record of beating indices in his career. Just look at his fund performance in the last 10 years versus S&P 500 and other fund managers. He was able to beat the indices with a very low-risk stock picks. In fact, I think his stocks portfolio and his stocks are offered great returns with minimal risk, which I love it. His proven strategy is known as three-legged stool, and he actually described this strategy on his website clearly. The essence of our investment approach is perfectly captured by the visual of a three-legged stool. This metaphoric three-legged stool describes what we look for in an investment. 1. Extraordinary business. 2. Talented management. And 3. Great reinvestment opportunities and histories. Chuck Akre is known as an investor who really cares about the management team of the companies he invested in. He spent significant time to study the CEOs of each company he owns and wants to make sure they care about shareholders' return over time rather than their own benefits. They have an interesting question on their website about the difference between Chuck Akre and other fund managers. This is Chuck Akre's response to this question. I believe that we are very different in at least 2 important ways. First, our decision to buy or sell shares in a business is based on the same fundamental criteria. We do not set sell price targets when we buy a security. We often say we are not looking for the exit on the way in. because we are not looking to simply trade securities based on their price movement. Rather, we are looking to compound the capital we manage and have identified that investing in these extraordinary businesses, as we define them, is the best way to achieve our goal. We begin sell discussions when one or more of the legs of our stool is broken or injured. The outcome over our years of experience clearly reinforce this notion. Second, Wall Street's obsession as the beat by a penny, miss by a penny syndrome frequently gives us opportunities to make investments at attractive valuations. We keep our focus squarely on growth in the underlying economic value per share, often defined as book value per share, over the course of the time. Our timetable is 5 and 10 years ahead, and quarterly misses often create opportunities for the capital we manage. I love how Chuck Akre looks at investing in the stock market. He's only focused on the fundamentals of each business. The quarterly earnings report doesn't change his thesis. He basically looks at the business quality, the compounding potential of that business, and the management team. I also try to look at investing this way, so Chuck Akre is one of the super investors that I really look forward to see his trades during each quarter. If we look at his portfolio, he has a relatively concentrated portfolio of almost 20 stocks at the moment. His largest position is MasterCard with a whopping 18% weighting. This is also a company that I started to buy into after I read their financial statements. He also owns a significant stake in Moody's, American Tower Corp, and Visa. All great companies with bulletproof fundamentals. One of the stocks that Chuck Akre consistently bought during the last few quarters is Brookfield Corporation, which is now one of his relatively larger positions. He added 4.7% to his Brookfield Corporation position during the last quarter. The interesting fact to me is that he didn't increase his Brookfield asset management position. This is actually in line with my own valuation, as I think BAM is fairly valued at this point, while Brookfield Corporation is undervalued by a large margin. When I see super investors that I totally agree with their philosophy, buying more shares of Brookfield Corporation at these levels on top of my own analysis, this gives me a lot of confidence about the company. In addition to Chuck Akre, Mohnish Pabrai also did the same thing. He added to his Brookfield Corporation position and actually sold out his Brookfield asset management position completely. For me personally, I think I'm going to add to Brookfield Corporation at these levels during the next couple of weeks and months. Now let's look at my RRSP account as well. I had more buys inside my RRSP where I hold my US and international stocks. I had more than $4,000 in cash inside this account after trimming Meta last month, and I deployed all of that cash during this month. I bought 10 more shares of Google, and that was way before this recent surge in Google share price. I think I bought Google at $104 and $105. I also bought 5 more shares of Amazon and 7 more shares of MasterCard. Now, if we look at the overall portfolio asset allocation after these changes, if we look at our combined portfolio of me and my wife, we can see that Aritzia is still the lead position in our portfolio. We have a concentrated portfolio with only 12 different stocks at this point. The stocks in this portfolio are Aritzia at 16% weighting, EQ Bank our second largest position at 13% weighting, Google is now the third position with 12% weighting, Meta is the fourth position with also 12% weighting, Brookfield is the next with 11%, TD 11%, Granite REIT with 7%, MasterCard at 7%, and Amazon at 5% weighting. And then we have 3 smaller positions, Keelamrit at 3%, Louis Vuitton Hennessy at 2%, and Alimentation Couche-Tard at only 1% weighting. There you are guys, I hope you enjoyed this quick video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. I will come back with the earnings report of Canadian banks soon, but until that time, I see you guys in the next video. Farewell.